Hello. I'm working for DKV. We are a pure health insurance company in Germany. We belong to the ERGO Corporation. The ERGO Corporation is an insurance corporation, the second biggest in Germany. And in turn, it belongs to Munich Re, one of the top 2 or 3 reinsurance companies worldwide. And I'm working for the actuarial department. Theoretically, I have no contact to IT. And I want to talk about premium capping schemes. Of course, I have to explain what these are. The type of presentation, we are talking about practical application. It's nothing theoretical. It's a straightforward problem. It's ideal for IPL because it deals with simple numerical operations on big matrices. And why is it important for us? We are talking about big chunks of money we want to use, something like hundreds of millions a year. We have to decide how to use them, and we use APL for this. And it is one of very few opportunities we have in German health insurance to decide anything. The first part of the presentation will show that we are very, very tightly regulated, and most of the things we do are exactly prescribed by auditors, by the supervising authority, by law, by. I will start with an introduction to the calculation and recalculation of premiums in German health insurance. So we have a framework, so we can understand what do we mean by capping. The second section is on the business model and where we get our surplus that we intend to use for capping. Then I will give an overview of the implemented process, as we said in APL plus WIN, but it has to be ported to Dyalog. And the fourth section is then on the capping proper, introducing capping schemes and seeing how they work. In the first section, we'll talk about how actuarial assumptions are used for calculating premiums, and how a premium recalculation is done. Whenever we have new actuarial assumptions, what the effects on the individual insured person is. One objective, except giving a framework for the capping, is to show just how tightly the German health insurance is. All the processes I will talk about are all supervised by at least one authority, usually this independent trustee. He's a very important person for us. The BaFin is the supervising authority. The internal auditors must be informed or agree to some processes, and sometimes other authorities may also intervene, the tax authority, for example, or the ministry. And the processes are at least supervised, and many of the processes are allowed only after agreement with the independent trustee. We need a green light to go forward with anything. How do we calculate our premiums? We base them on mortality and lapse rates. They're always taken into account. Example for mortality and lapse rates could be those. Sorry, that was the wrong button. You see, in young years, people may contract us and lapse on the contract. In high age, when they are old and frail and sick, of course, nobody defaults on its health insurance, it's clear. And on the other side, in young years, almost nobody dies in Germany, but eventually everybody has to go. And both probabilities depend on gender, but starting with the year 2013, we are obliged to unisexify them for newer contracts. It was a decision of the European, of the higher European Court, that we had to sell only unisex contracts. They depend on age, but not birth year. It's not usual to use generational tables in German health insurance. And they are annually revised and contain securities. This is the part that is tightly regulated. It's exactly written down in law and controlled by the independent trustee. How do you do the revision? When? How do you smooth out what security you have? And you have always to use the newest tables when you do a recalculation or a new calculation. No, everything. Furthermore, we use tables on claims per capita. This may look like this. These examples are of a high-end tariff. And you see the claims in a year go into the thousands of euros, depending on age. For example, this outpatient costs in high age, 90 years old, are over 9,000 euros a year. These are, of course, sums that nobody could pay. So the premium calculation must do something about this. We also put into the calculation a technical interest rate, iota. It's an interest rate we can assume that on average we can achieve in the next 30 years. These actuarial assumptions, the claims, depend again on gender and the same provision with unisex, age, and securities. The interest rate is always a company constant, and up to 2012, all German insurers used 3.5%. This is not realistic anymore. Starting with 2030, each company has started using on-course. Again, everything tightly regulated. BaFin controls each year the interest rate of each company, says that's okay or that's not okay. The independent trustee must control the claims per capita, year, everything tightly regulated. How do we do the actual calculation? We put all these actuarial assumptions in, and we say that the premiums shall depend on gender, or possibly not, and on age at contract time, but not on aging. Using all these tables, we have to calculate the premium that will stay lifelong constant, except for the case that the actuarial assumptions are to be revised. This means we use a principle, it's called equivalence principle. We calculate the premiums in such a way that the income from a lifelong constant premium equals the lifelong claims. And of course, all this data have to be accumulated and discounted with the interest rate and the mortality rate and such things. I'll flash the formula. Do not try to memorize it, but everybody who has worked in health insurance will see that this is boring standard. It's the absolute standard. And the premiums are defined by this equation. This is the premium, this is the present, the annuity, and this is the present value of claims. And it can be shown, I've written it here down, you can look it up, that this gives a transitivity. If you start with this, after n years, you have accumulated a reserve, and taking this reserve into account, the equivalence principle still holds. So this means the claims you still expect and the premiums you still expect are equal if you add the reserve on the side of the premiums. Okay. These are our principles. And until now, everything is tightly regulated, no leave to decide anything. This was the net calculation. We have also a gross premium calculation. It is mandatory to to add a security margin on your premiums. At least 5%. It is so. Then you can add your costs, for example, claim regulation costs, and you can subtract the discount on the costs, not on the net premium, if you have objective reasons. One example would be a company may sell insurance to its own employees, and the employees will not pay a provision because they do not sign up in marketing, but in the company itself. These provisions are costs, and you can't objectively prove that no employee of the company will pay them, so you are allowed to give them a discount on this cost. But nothing more. You get a monthly premium. Standard formula would be this. Again, it's boring standard for everybody who knows it. But nothing more. You are not allowed to make individual discounts or things. You are only allowed to get individual risk loadings. If you have a person who wants to contract you and he has a medical condition that is known, you may sign an additional contract with him saying that you will pay 10% more because of the medical condition he already has. But this is also an additional contract. It has to be based on objective reasons. You have to use some standard for each and everybody, the same examination, the same questions, and the same result for the same medical condition, and it's binding for both sides. This means if you have 10% risk loading, you have got to keep this 10% for the whole life of the insured person at 10%. You may not arbitrarily change it in the future. So, we have seen that the premium calculation is as it is. We can decide on almost nothing. And we have calculated premiums that may look like this. This is the premium for different contract ages, and these are the claims per capita for the same, again for contract age. So, this means a person who contracts us at age 35 starts by paying something like 1,500 euros a year more than it is needed for his claims. This 1,500 euros are accumulated in a reserve, and at some point here, he reaches equilibrium, somewhere at age 57, with this lifelong constant premium. He pays as much as it costs, but in high age, he pays almost 10,000 euros less a year than his claims are on average. And of course, this part is the accumulation of the reserve, and this part is the usage of the reserve. And depending on how steep or flat this profile is, the numbers may be bigger or smaller. This is a bit steeper and then gives higher numbers. Of course, all high-end tariff. Of course, if you have only a dental coverage, the sums are not so huge. And this means we accumulate reserves, and in fact, huge reserves. Here is the same tariff as in the other example. And here I say, if you are one of the few persons who contracts us at age 20 and stays with us until end age 100, he will start accumulating a reserve until the age of 69. And then he will use it. and the maximum reserve you will accumulate will be 105,000 euros. One person. It's 31 times the annual premium he's paying. It's a big number. And the steeper tariff may give even more. Even if the contract age is very high, for example 60, you will still accumulate 45,000 euros. This is always one single person. We have a total reserve that encompasses this benefit reserve we've just seen, but many other kinds of reserve. It's rather complicated in the detail. The principles are simple, but the details are complicated. And the reserve is a calculated quantity. We do not have a person with a stock getting the premiums, paying claims, and then seeing at the end of the year what has been left for the reserve. We, as an actuarial department, calculate the reserve or tell ERGO how to calculate it, and then tell the asset management, please put aside so many billions. The reserve is, of course, meaningful only in a collective sense. I talked about the reserve of one person, but of course, it does not make sense on the level of one person. It's a common misunderstanding. People come and say, could I have my reserve, please? I could use it. Now we calculated the premiums, and so what happens in a life of a person if nothing has to be changed on the actuarial assumptions. But the actuarial assumptions may, of course, prove to be not correct. Claims per capita or lapse rates may change. Therefore, there is a compulsory check of the claims per capita in a year versus the real claims every year. Again, by law, we have an exact cooking receipt how to do this. It is not identical to the calculation. This is important because, practically important, it can mean complications. I will not elaborate, but it can mean that the company is losing money for some years for a tariff and can do nothing about it. Yes, if the results are within some limits, then the company has no right to do a recalculation. If they are outside of some limits, it is a compulsory recalculation, and in between, it must be done in agreement with the independent trustee. There is another check, a more recent check, on the mortality rates. It has been introduced, I think, 4 years ago. No check is allowed on the lapse rates and the interest rate, the company risk. Yes, we had I think 2001, we had one very important tariff. We're losing many millions a year because the lapse rates had changed, whereas the claims were exactly calculated. It is as it is. If these checks say you have to recalculate, then another process is started, and the recalculation is done exactly the way original calculation was done with the newer assumptions, and always in agreement with the independent trustee. What does the premium recalculation means for an individual? Until now we had seen a lifelong constant premium, and of course now something has to happen. And the principle is the reserve defines everything. We calculate the reserve accumulated up to the point of recalculation. Say this is a fixed sum. It encompasses the rights of the insured person, and we use the new annuities to define an individual and permanent discount that is financed by the reserve on the new premium to the age the person has reached. The formulas would be this formula gives the accumulated reserve, and the reserve defines a discount. The important thing is that the reserve is divided by an annuity. The annuity says more or less how many years do we expect to have this person under contract. And so it says, how have I got to make small pieces out of my reserve, each of them lasting for 1 year. That's the essence of the formula. Okay, and this would give the new individual premium. But we call it a technical start. After such a technical start, all the history of the person for the first M years is incorporated in this individual discounts and may be discarded. We'll see examples on it. We'll see examples what it does mean for individual persons. So everything very tightly regulated. Where do we get our money from? And how do we use this money to do this premium capping I want to talk about? One objective to show that these capping schemes are one of the few opportunities we have to decide and steer in it. We have seen arbitrary calculation or recalculation of premiums is not possible. We are not allowed to use explicit profit margins or discounts on our premiums. Where's the money? We have the security margins. In all tables there are security margins and they are mandatory. We have the explicit security margin in the net premiums, again, mandatory. We have a huge reserve, and we may earn interest above the technical interest rate. And we have some add-on tariffs, some small things that are not so heavily regulated. Some things for €3 a month, this do not interest the supervising authority, and they may contain profit margins or whatever. Especially the reserve. It is balanced as a part of liabilities, and we can see here it completely dominates our balance sheet. This is the balance sheet DKV, passiva liabilities in millions of euros. We started with something like 28 billion, here we are by 37 billion. The equity is almost constant, and something like 97% of liabilities is the reserve. It's a big amount of money. And of course, yes, we had seen here that the reserve can run into the tens of thousands for single contracts. And this means if our real interest rate is just 0.5% above the average technical rate, we would earn something like 150 million euros in 1 year from this. 30 billion multiplied with 0.5%. Or if the mortality or lapse rate happens to be a bit higher than expected, then of those persons with 50 or 100,000 euros reserve, of course this is earned money. But what does this mean? Does this mean that security margins are more or less huge profit margins? No, that's not the case, because we must return most of it to policyholders within 3 years, at least 80% of the sum.
So if a guy dies, you always widow money in 3 years?
Something like this. Something like this. The only thing is that the money we get back, the money we earn, goes into a fund, that is not so tightly regulated as the calculation itself. We call this war chest, German RFB. It means erfolgsabhängige oder erfolgsunabhängige Beitragsrückerstattung. It may be used only in agreement with the independent trustee, but there is no law saying you have to use it on this day and for this person. The two usual ways to use it is direct premium refunding for people who had no claims in the past year, and capping. These are the capping schemes we'll come to. Okay, we have seen that the premium, the individual premium increase, and now we are coming slowly to capping. The individual recalculation of the premium depends, of course, on plan, gender, age, but also the accumulated reserve. This means they are highly individual because they are based on the whole history of each and every person. And they cannot be directly correlated with increases in premiums at contract time. Let us see one example. This is an example that assumes that between original calculation and recalculation there was a long time, there were many years elapsed, let us say 10 or 50 years. The person came to us with a premium of 100 euros. And now, after some years, the premium, if he wanted to contract us at this age, would be 250. Of course, he still pays the 100, but there has been no recalculation. Now we recalculate and see that for the original age X, we would have an increase from 50%, and for the age he has now of 20%. This means that the profile of the claims is more or less stable. We have seen this profile. The claims, they scale at the recalculation. The form does not. What does this mean for the individual? First of all, this number is totally irrelevant. We have to say this would have been his lifelong contract, lifelong constant premium. This is the discount he has earned by accumulating his reserve, and this is the new premium, the additional coverage he has to pay. So first level, this is the premium increase he will have. But there is another thing, and we will use the new lapse and mortality rates and hold constant the reserve and not the discount. The reserve he has earned, but not the discount. And if the newer mortality rates and newer lapse rates are significantly lower than the old ones, then the reserve has to last longer, and we can grant it only a lower discount for the same reserve. This means he may lose 30-40% of his discount also. This means his premium will end up being something like this. One component, one increase of the recalculation itself, and one component he lost on his discount. And what the customer sees is something like this. He sees 110% increase, although we had something like 15 or 20. It is as it is. And the idea is... what happens when we tell him, probably he gets a heart attack. Yes, the mortality rate. Therefore, we want to avoid financial hardship by capping increases that are too high. That is what capping means. That during a recalculation, we look at all premium increases and try to cap the maxima. And it's one of the obligations of the independent trustee to supervise us that we will do this properly. We could, of course, come the idea to say we will cap only premium increases of our own employees. We will pay nothing. But this is something the independent trustee must forbid. Okay. We have seen that discounts are always equivalent to a reserve. So if we want to cap something, we have to fix a discount. We want an additional discount, price it to a reserve, inject the necessary money into the reserve, and then we can reduce its premium. Okay, the formula would be this. We need some function of the old premium that give us a maximum acceptable premium after the recalculation. One such formula could be this. We will see it graphically presently. And then we would say, if the intermediate new premium is above the acceptable maximum, then we want to give him this discount to achieve the final premium that is acceptable, that is at the maximum, and we have to calculate how much money this costs. Okay?
You need to inject equity into the reserve.
Yes, but not equity. This equity would mean our board of executives would kill us. We need to find the money. And the money is, of course, this RFB war chest. This means we must find a way to use this RFB for capping premiums. For this, we have to create some objective capping rules, depending on gender or age, but not on contract number or name or something like this. It must be something that the independent trustee can agree to. And can say, okay, it's fair, it avoids financial hardship for everybody, possibly the older persons who are not working anymore and only depend on their rent, have a lower acceptable premium increase than young professionals or whatever. We have to price the costs, reach agreement with the trustee that's it, and implement the rules in production. This is money we have used for implementing such rules in the last years. These are millions of euros we used for a capping scheme. For example, the year 2030 was a rather hefty one. We used over 600 million. This is a direct premium refunding for health insurance, and this is the money added to the war chest in the same year. They are big sums of money. The problem, the agreement must be before the productive implementation, and the money is part of the agreement. If the productive implementation gives another sum, for example, 200 million more, then the independent trustee may force us to finance out of equity, and then we will all be shot. Of course, it's not a problem for ABL. For ABL, it was a good chance to do some good simulation. Okay. We have now the background and the framework. And we are coming now to the workspace itself, an APL plus win workspace. And then we will come to the capping schemes proper. Yes, I want just briefly to show what this workspace contains and what dependencies with other workspaces there are. Two of the tasks are to provide an appropriate databases for capping, and then simulate the individual premium recalculation, and then we are at the point where we can simulate the capping rules themselves. Objective to separate the technically necessary preparations from the cupping itself. Yes, the workspace itself does not contain only the pricing of the cupping scheme and the user results. There is also a check of the cupping effects on the productive databases. This is the check after the feed to be sure that everything was okay. And there is also an official result from the IT company of the corporation that has to be compared with the simulation and the effects on productive databases. On each and every one of them there may be errors. And the last points are not part of this presentation. I'll flash. The main GUI is a very simple one, something like this. And this is the part with cupping. This is the control part. This is the importing of the official result. And this is the button that says, this year everything was okay. We do not have to pay 200 million more. The cupping process itself starts with extracting databases from DB2. All our productive database data are on DB2 databases. Then the second task is to simulate the premium calculation and then do the pricing of the cupping model. Or else, we come to this, agglomerate the data in a special way that allows the estimation of the cost of the model in very short times. And then we have, of course, to use the results, maybe present them graphically, or use them for special tests, technical tests, and other things. Those last points, again, are not part of the presentation. If we go to this GUI again, this would be example of further usages of the results that do not interest us. On the technical side, the workspace is very simply structured. It's not deep, measured in nesting of calls. It's all very simple and straightforward. There are many details, and there are many contracts to be calculated and simulated, but the calculations themselves are very simple numerical operations. Adding, maybe subtracting, dividing, multiplying, but not more. Each of these main tasks is a process go through once. This means there is a very low degree of interactivity in the whole thing, except the estimation of the cost. That's the only point where there is a GUI and where the user does something. There are three simple GUIs necessary and provided, of course, all in APL plus Win. The one is this main GUI. Then there is tedious and boring GUI for all the parameters you need. You see there are many pages on this thing, and those are things you have to type in to get the right simulation. There are over 130 parameters you may use. In a normal simulation, you need 4 or 5 of them, but there are always special cases. This means, of course, that there are only 4 or 5 people using the workspace, because they must get familiar with the parameters first. Another person could use it, but probably he would get meaningless results because he would do something wrong and simulate something not wanted. Okay, for the estimation of the cost, there is a GUI that is a bit more complicated. We will hopefully see it in a small demonstration at the end of the talk. Some functions are important from other workspaces. I have noted here in read some points that will be done in another way under Dyalog. Now, to the first main tasks, I think I will go quickly through them. Why should I want to extract and save the databases in component file in a separate task? One of the important points is that the select privileges on the productive databases are severely restricted. Practically, I'm always providing the databases. And you can see here the runtime of this thing. The input from the DB2 is by far the dominating factor, and it may vary widely depending on how much work is done on the database. That's why it's a good idea to have it as a separate task. The data we extract are reproducible. We have a data model with business end system time, and the data we extract are the whole business in focus, but one point in this two-dimensional time continuum. The function uses ODBC. It enforces a 4-byte integer format. This is possible because we have small numerical precision, and it helps to reduce input-output, memory usage, such things. Then again, the premium recalculation is also a separate task. If I did not have it as a separate task, we would add some runtime to each premium capping scheme. Again, some input-output for the component files. The simulation is 3.5 minutes for something like 11 million tariffs. It's not much. These agglomerations are only needed to have different kinds of results and statistics and whatever. Yes, and there are again some problems with privileges and how are the interactions with the calculation program. It's an SQL server-based program in Visual Basic.net. Technical questions that led me to say it's better to separate it. The layout of this premium calculation is again very simple. It starts by importing all the annuities and other stuff it needs, and then in the main loop it always reads something like 1 million cases in, thus simulates the premium recalculation and writes the result back to a component file. And yes, in this main loop, it is a recalculation light. There is also a reference system with which we control the recalculation. The productive one uses something like 150 columns. But the difference are only details and rounding and special cases and such things. Yes, constant CPU and input-output. We do not have the problem with DB2 on this.
I just need to understand that. So the recalculation line, you're using a smaller number of simulations. So you said that
No, they are all persons in it, but a smaller number of columns.
Okay.
The reserve may be divided into 8 or 10 kinds and sub-kinds with portability, without, and these details are not important for the premium capping scheme because they may only, due to rounding, change 1 or 2 cents in the premium coming out. Okay. The main calculation is done more or less as in the example we show with one person, calculating the reserve, calculating the new discount and getting something. Part of this premium recalculation is we have some parts of the capping some special parts. They are governed by these paragraphs in the German law that are not dependent on the capping scheme, and these are done in the first step. And now we come to pricing a model and estimating its cost proper. Do some capping. We want to enable our board of executives to decide something, and you want to achieve the consent of the independent trustee. We always need some results like the cost, the price of the model, the premium increase, how much we earn, and the trustee is always interested in the increased distribution in the matrix form, so you can see how many people have 110% increase. For special, there are more or less frequently other questions posed, and this means that I have to create many more results. Many Excel sheets. Many of them are very seldomly used, but they are necessary. And this means much more data processing and time lost on details. Now, let us see what a capping scheme may look like. This would implement 3 rules depending on the premium before the recalculation and the premium increase. It defines a range of allowed premium increases. We have also a component here called social capping. I will not go into details. It's a speciality of DKV. And this green range gives us the allowed premium increases. This means that these 2 persons would pay too much, and those are the discounts we have financed to get them into an allowable range. And the problem is the workspace is used also for simulating new processes, proposed processes, test new ideas, answer questions, and this adds very, very much complexity. For example, a question of the board of executives 3 years ago was, what if we say that the social capping allows also a decrease in premium, so the person is pushed back to the maximum premium we want to achieve? This would mean that this person would have to get a discount that would lead to a negative increase, so you would come to 460 euros at another cost. And other specialities. This results, of course, in a very complex function and many parameters that are almost not used, but they must be there. Again, it's a very simple scheme with a preparation and then a main loop, getting these big matrices, doing some straightforward calculation, preparing a big range of agglomerations, and then saving the agglomerating data and presenting it in Excel. If we look at the runtime, this is the presentation in Excel, and it completely dominates the pure simulation. And even the agglomeration of data completely dominates the simulation. And there is a bad story here. This time has gone in Office 2030 up by a factor of 4 to 6, because Microsoft does not like the comp thing anymore. So the kernel function does this calculation we have seen in one example, and nothing more. And I say something about the estimation of cost. We have a simulation that works minutes rather than hours, but how can I go down to seconds? And I have good information on one model, but maybe I want to compare many models. That's a bit cumbersome. I can't try and define an appropriate agglomeration for it. The idea is I take premiums and premium increases and group them midpoint in €1 intervals. And I expect that the simulation of this agglomerated data will be similar to the pricing on each individual. And I can give error limits for it. I can say what the error margin of the estimation compared to the individual pricing will be.
It's sort of like antithetic variables for Monte Carlo.
No, nothing with Monte. Everything is deterministic.
Yeah,
I'm just doing a special grouping, not totally trivial grouping of data. So I'm not forced to work with 11 million contracts that do not fit into the workspace, but with something like 110,000 data points. I hope I can show it. Some details must be ignored, of course. Here, that's a formula for the grouping. Yes, it's done with the floor, and that's the error margins that I get. I will show this now before the end. So this is the idea for preparing an agglomeration for an interactive estimation of costs, which is done in the same GUI that allows a non-APLer to create models. And I've opened this just now. Yes, the GUI I will open. And just to conclude the talk proper, we have seen a moderately demanding software architecture. The problem are the details, and the problems are the work needed to ensure performance and reliability. Now I will close this and try to open my main GUI. I will also have to open the, wherever I put it, I close it again, I open this lens in the hope that you will be able to see something of the GUI. So, that's the main GUI, and now I say I want to interactively so this shows me that I have loaded an agglomeration of data and I can use it to estimate something. For example, I go here, I try to put the lens on top. No, wait a moment, I must load a model for it. I load a model we used at some time with this. And now you can see here at the bottom some rules for individual plans and individual ages. And I have one simple button. It does not fit. It does not fit. Instead, it does not fit. I cannot reach the button. It's too small. Instead of doing this, I'll do something else. I'll show how to compare simple models on a part of business and cost. For example, I say I want the M tariffs, I want men, I want the ages 20 to 64, and I want to see what can I do. I will go from 1% to 30%, or from 0% to 30%, each 3%. I want to do 100 small simulations. And I ask the system, you cannot see properly, to highlight cases where I use 50 million euros. And I get a small matrix here. He did 100 small calculations. and tells me with 15 million euros you would have to move somewhere between 6 and 16% for the one limit and 4 and 40 for the other. And then I can say, okay, let's look at the 6 to 16 and 40 to 15 in more detail. Here I go down to 300 euros, everything more than, no, sums up to 300 euros do not interest me. And I get something like this. 40, 50, no, I wanted to go to 1 here, again. Okay, and here I see if I want to spend 15 millions on this part of the contract, then I could limit them to 10% and 45 euros. I did a small simulation on part of business in force. That's what the calculator practically doing. He has some targets from the board of executives. Use 15 million for this group of people, and he says, okay, with this 15 million I could do this, and I will do. Okay, we have only 2 minutes more. Is there a question?
Is it compulsory for German nationals to have private health insurance?
No, it's compulsory to have some kind of health insurance. You can decide if the insurance is private or the normal one. If your income is above, I think, 42 or 45,000 euros a year, if it is less, then you are in the state system. And you can acquire a supplementary health coverage, for example, 1 bed in hospital from a private insurer.
Hi, you mentioned you're converting, or you're in the process of converting to Dyalog from APL Plus. Could you tell us a bit about that? And
I have done nothing on it. It's just something that must be done in the next month. We will get our first productive installation of Dyalog in the next 2 weeks.
So you don't know if it's painful or easy yet?
No.
So how much IT support do you have to make this happen, or who does the work, basically?
This is all done by me.
By you?
Yes, completely. We do in Cologne. We have another 2 or 3 persons that are familiar with APL, but they are doing other things. All these simulations are completely by me. It's a bit unfortunate. If I get under the bus, there is nobody. No sort of stuff.
25,000 euros.
Yes.
Do you find it easy to work with these GUIs and manage all this? What's the hardest part, easiest part of doing all this?
I'm not a specialist in GUIs. I'm not able to make a good GUI, and those are used only by 2 or 3 persons who know how to use them. They are functional. I do not like GUIs. I like the calculations proper.